A very good morning, and you're watching Market Cafe on ET now with me, Vinny Motiwala, along with me is Ankita Saxena as well. Very good morning to you as well, Ankita. And
good morning, Vinny.
It's midweek, but does it seem like midweek blues coming in for the market? What's the handover that we're getting?
Yeah, Vinny, the markets have been a bit flattish yesterday, and because a very important speech is going to happen today, which is the Fed Chair Jerome Powell is going to speak on the rate hikes. That's what the investors are really looking forward to. The S&P 500 and Nasdaq Composite closed lower for the third straight session yesterday as traders struggled to recover from the sharp losses suffered in the previous session, and as they look ahead to more economic data that's coming this week. Now, the Nasdaq Composite shed 0.5% to close at 10,900. The S&P 500 lost 0.1%, ending the day at 3,900. And the Dow Jones Industrial Average notched a marginal gain, closing 3 points up at 3,800. Now, investors are watching for data that's coming this week that includes JOLTS job openings that's due today and November payrolls that is due on Friday. For some insight into how the economy is performing, these data points will be very important. And they're also waiting for the Federal Reserve Chair Jerome Powell's scheduled speech on fiscal and monetary policy that's due today for clues into whether the central bank will slow interest rate hikes. Investors have been expecting a softer rate hike of 50 basis points in December instead of 75. So that's a very important speech that the investors across the globe will be looking out for today. Now, moving on to European markets. European markets closed fractionally lower on Tuesday after a choppy session as investors continued to monitor news coming in from China on the COVID restrictions. The Pan-European Stock 600 and DAX closed flat, down 0.1%. FTSE and CAC ended the day in the green, just marginally up, so largely a very flattish handover coming in from the global markets. So now let's move over to the other news that made headlines. Over to you, Vinny.
Absolutely. Flattish handover, HX Nifty indicating a muted start coming in as well. But let's move on to one of the key highlights that you did mention is Federal Reserve Chair Jerome Powell. All eyes are on his speech that will be delivered this month, and we will be keeping an eye out on that. Now, Powell will actually talk about the outlook for the US economy, the labor market as well. Investors will be looking for clues about when the Fed will slow the pace of its aggressive interest rate hikes. This comes against the backdrop of Fed's dual mandate of price stability and the maximum sustained employment. Now, investors have passed a slew of economic data since the Fed's latest meeting that has somewhat eased inflation concerns. So the case for smaller rate hikes is strong, and the verdict is due to be out at the central bank's last meeting this month.
And NATO has pledged to give more weapons to Ukraine and help fix critical energy infrastructure damaged by massive Russian missile strikes. The Russian strikes have left millions of Ukrainians without electricity and running water in freezing temperatures. Under the Geneva Conventions, attacks on civilians or the infrastructure vital to their survival could be interrupted as the war crime.
Moving on to Twitter, that has actually rolled back a policy aimed at tackling misinformation related to COVID-19. The social media platform has lent itself to the risk of potential surge in false claims, even as the cases rise in China and some parts of the world as well. The move also comes amid concerns about Twitter's ability to fight misinformation after it let go about half of its staff, including those involved in the content moderation under new boss Elon Musk.
And European Union countries are inching towards a deal this week on a price cap on Russian oil. The price cap is linked to a package of new sanctions against Moscow over its invasion of Ukraine. The deadline for the deal is December 5th, when the European Union own full embargo on purchase of Russian seaborne oil kicks in. The price cap is a softer measure proposed by the group of 7 nations. The caveat is that there is a disagreement among the 27 European Union countries on the level of the cap.
An update on China's COVID policy, the unrest that we're seeing coming in over there. China's National Health Commission actually issued a notice to increase COVID vaccinations for the elderly and shorten the time between the vaccinations. The country faces growing calls from experts to rethink its zero COVID strategy. China has been witnessing massive protests against strict lockdowns. Health officials, however, deflect the issue by saying the unrest stemmed from overzealous implementation of the policy rather than measures themselves.
And speaking of the China unrest, Washington too has reacted to the crackdown on protests in China. John Kirby, the spokesperson of US National Security Council, says that people should be allowed to peacefully protest. UK PM Rishi Sunak also discussed the roadmap for China. Let's take a look on what they had to say.
Our message to peaceful protesters around the world is the same and consistent. People should be allowed the right to assemble and to peacefully protest policies or laws or dictates that they take issue with. I think a moment to reassert what we believe in when it comes to free assembly and peaceful protest, and we've done that, and we'll continue to do that, whether it's people protesting in Iran or China or anywhere else around the world. Nothing's changed about the president's firm belief in the power of democracy and democratic institutions and how important that is.
We also need to evolve our approach to China. Now, let's be clear, the so-called golden era is over, along with the naive idea that trade would automatically lead to social and political reform.
Also, let's just, earlier my colleague Vikram Oza explained the world powers are isolating Xi Jinping and why. Let's go across and listen in.
Now, Xi Jinping is on everyone's mind these days. The sins of the communist government in China seem to have finally caught up with the authoritarian regime. On one side, unprecedented civil unrest has seemingly loosened Xi Jinping's iron grip on his subjects. And now, UK's PM Rishi Sunak has signalled the end of the so-called golden era. And with it comes a shift in diplomatic policies with China. Sunak slammed the brutal crackdown on the protest by the Chinese government, taking on Xi and saying that the regime is moving towards even greater authoritarianism. Interestingly, his comments come just days after the G20 meeting, where he met with PM Modi, Joe Biden, but his meeting with Xi Jinping did not materialize. The sins of the Xi Jinping cover-up has a lot on ground, from human rights of his citizens to challenging sovereignty of other countries. We start with the latest. Now, Xi Jinping immediately put his foot down on the citizens who took to the street against the zero COVID policy. As soon as slogans were chanted demanding Xi's resignation, the police batons came out. Now, this isn't the first time China has had a run-in with human rights. International bodies have probed and found enough evidence of human rights abuse, amounting to almost a genocide of Uyghur Muslims. Now, in August this year, the UN High Commissioner of Human Rights released a report concluding serious human rights violation against Uyghurs as well as other minorities that were committed. There are also those who say that these are but internal matters. But China makes sure things remain spicy around the neighborhood as well. From Galwan to Taiwan, Chinese PLA is trying to exert influence in its neighborhood. China's bid for dominance in the Indo-Pacific region is a problem for India, the West and the entire region. Just days ago, the Canadian government released its own Indo-Pacific strategy report. Canada has marked Beijing as an increasingly disrupted global power. In the same report, the Justin Trudeau-led government named India as a crucial partner. So interestingly, this comes just days after Xi Jinping gave Trudeau a earful for allegedly leaking details of their meeting in Bali. But China's sins are not confined to the physical world. Over the past 2 decades, China's aggression has shifted to digital space as well. According to reports, Chinese state-sponsored hackers have wreaked havoc havoc for governments as well as private sector equally. Just days ago, a ransomware attack with alleged links to China hit the Australian Defence Department. In April, when India was dealing with an energy security issue of its own, Chinese hackers reportedly targeted 7 power hubs, although unsuccessfully. Economic growth on the past few decades has gotten to China's head, but with the world finally seeing the dragon's real face, Xi's third tenure may see him struggling with internal strife, global isolation, as well as the COVID virus that keeps coming back to haunt him.
Well, that was my colleague Stacey Pereira bringing us the latest on the crisis. Now, moving on, the US Senate has passed the Respect for Marriage Act, that is a legislation to protect same-sex unions. A decision could be likely as soon as next week. Nearly 50 House Republicans supported the measure earlier this year. Meanwhile, Singapore's parliament decriminalized sex between men. However, it also amended the constitution to prevent court challenges that in other countries have led to legislation of same-sex marriage.
On that note, we're going to slip into a very short break, viewers. Don't go anywhere. We'll be back with more domestic update. Welcome back, and you're watching Market Cafe on ET Now. Let's get more domestic updates, and we have to start with the big aviation consolidation that has been confirmed. Tata Group has released a statement confirming the merger of Air India and Vistara. Now, Singapore Airlines will invest money in this. It's going to be 2,059 crore rupees in Air India. N. Chandrasekharan, the chairman at Tata Sons, released a statement calling it an important milestone in Air India's journey towards becoming a world-class airline. Anurag Joshi is joining in with us to bring us more details on that.
The Tata Group has announced the merger of Air India and Vistara. Vistara is due to be merged into Air India by March 2024 after receiving all requisite approvals. After the merger, the combined fleet size of the airline will be 218 aircraft. Air India will be India's biggest international airline and the nation's second biggest carrier. Now, Vistara is a joint venture between the Tata Group and Singapore Airlines, with the Tata Group owning 51% stake and Singapore Airlines owning the remaining 49% stake. And after the merger, Singapore Airlines becomes a shareholder in Air India with a 25.1% shareholding. Singapore Airlines will also invest 2,059 crore into Air India. Now, just to take you back a bit into the background, so the Tatas had acquired Air India in October last year, and the acquisition was completed in January this year. The acquisition was done through a 100% subsidiary of Tata Sons called Thales.
Right, that was Anurag for you. My colleague Tamanna Inamdar also spoke to Mark Martin of Martin Consulting to understand what the Vistara merger could mean for the stakeholders. This is what he thinks of the deal.
The ridiculously low price at which they bought Air India, the 25% at $250 million. If you look at the total value of what Tata's acquired Air India, which is I think 14,000 and 18,000 crores, the math and the logic is incomprehensible. I mean, you're looking at a 25% at about $250 million. Something just does not seem right. And, I hate to be bringing up sort of a deja vu situation here, but let's not go. Let's just go back just about, 12 or 10 years ago when Etihad acquired Jet Airways. It was the same thing, at 25% at $250 million. Is it deja vu? Are we seeing this happen again? Because my bigger concern is the Air India, which was destined to be a global global mega airline with a focus again of rebuilding India with the world, now gets a 25% stake from Singapore Airlines. Now, what is the role of Singapore Airlines? Are they going to have controlling rights? Are they going to have management rights? Are they just a strategic investor? Do they take a back seat and give the driving seat to Air India? What on earth is going to be the structure of the deal as we see it panning out?
No, no, Mark, just to that, doesn't it seem likely, considering the kind of brand value that Air India has and the fact that the Tatas have taken it over, that it's unlikely that Singapore Airlines will have the driver's seat at all in this entity?
Well, I hope so. I hope not, and I hope so. I mean, I just hope it's a win-win relationship and better maturity prevails at the end of the day. But let's be honest, Vistara from the start has been an utter disaster as an airline.
And let's move on and to talk about the food aggregator. Now, report suggests that we are likely to see Zomato share exchange of hands today, and reports emerging that Alibaba is likely to sell around $200 million worth shares of Zomato via a block deal. This could amount to a stake of 3.5% in the company. This might be at a 5 to 6% discount on the closing price we saw coming in yesterday, and Citi might be the broker for this deal. This is what reports are suggesting. Surely a stock to watch out for today is going to be Zomato.
And the second quarter GDP numbers will be announced today. Now, ET Now's poll expects GDP to rise by 6.2%, just under RBI's estimates of 6.3%. My colleague Harsh Saita is here to break down what all we should be looking out for. Over to you, Harsh.
GDP for Q2 FY23 expected in at 6.2%. That's what our poll indicates. Let's contextualize this a little bit. Zoom out. Q2 FY21, the number degrew 7.4% versus Q2 FY20. Q2 FY22 grew 8.4% after that degrowth, and that typically means that versus the Q2 FY20 base, the growth is currently 6.6%. So the RBI has penciled in a number of 6.3% for this particular quarter. The full year number which the RBI has penciled in is at 7%. Mind you, last quarter it was 7.2%. So that's a bit of a correction from the RBI. Where IMF and OECD are concerned, something around 6.5 to 6.8% is what they're penciling in. Mind you, full year FY23. With regard to high frequency indicators, strong tax collections to lead with 17.5%. Overall tax collections have grown by versus H1 FY22. We're also seeing direct taxes, 23.5% growth in direct taxes, almost 12%. And we're seeing GST revenue up a solid 33.5% when I'm looking at the entire H1 of this year. Tax revenue obviously allows for a better government spend as well, and that should obviously have a positive impact on GDP. CPI has come off a little bit. IIP numbers continue to be quite robust, 1.5% growth there. We're also seeing Purchaser Manager Index numbers looking quite good across the quarter. For manufacturing, it was between 55 and 56.5, and for services, it stood between 54 and 55.5. So growth across the board is what we're currently seeing. Vehicle sales have continued to be strong, 11% growth when I'm looking at the September 2022 number versus a year ago, and we're also seeing banking sector credit growth quite robust. So overall, we're expecting a decent set from this particular GDP number.
Okay, now that was all about the block deals that will be happening today on Zomato. But moving on, it was only last week that we told you that LIC was doing away with two of its term insurance policies, Jeevan Amar and a tech term. Well, now we are picking up at LIC will relaunch new term policies with 35 to 40% hike in premium. Let's bring in Anurag Shah, who's here to tell us more details on how these premium hikes will impact those looking to buy term insurances now.
Last week we have said that LIC is going to withdraw their term insurance plan, two term insurance plan, Jeevan Amar and Tech term insurance. So our news has been confirmed that LIC has already withdrawn two term insurance plans, and it has been replaced with new term insurance policies, and they have named it as a new tech term plan. But surprisingly, the hike in premium is of 35% in new plans which have been been launched by LIC and named as new tech term plan. The new premium is higher than 35% than the previous premium. So we have done a small calculation. Previously, in their previous tech term plan, which is available on online, so for 1 crore sum insurance policy of term insurance for tenure of 40 years of a person of age 30 year, premium used to be 14,122 rupees, but just now we have checked on their website for 1 crore term insurance sum assured, premium is 18,992 for a tenure of same 40 year for a person of age 30-year-old. So this hike is due to rise in reinsurance premium, and one of the most important reason, and for last 3 years there was no hike from LIC, but for the new term insurance product they have launched, there is a hike of 35%. LIC management has also stated that going ahead they will be focusing more on non-par products. So term insurance product falls into the category of non-par products.
Okay, let's move on and get in an update of what the Asian markets are doing actually this morning. Seems like a subdued start is actually coming in for the Asian markets as well. Not much of a direction that they've taken. Look at Shanghai Hang Seng just trading with mild gains coming in as of now. Even Nikkei actually is trading with a decline of 0.8% in trade, and Hang Seng I think is turned negative as well as of now. It's flip-flopping between the red and the green. China's factory activity data that has come out has missed the expectations coming in. So Asian markets, you could just see a bit of a muted opening coming in over there as well. Also, let's not forget, the continued unrest that is continuing in China, the protests that are continuing in China due to the COVID situation. And what markets are keeping an eye out on is also the Fed Chair Powell's speech that will be coming in today as well. Now, in terms of even ASX 200, that is just opened with mild gains as of now as well, and Kospi trading with almost 0.5% of gains as of now as well. But let's look at what Brent crude oil prices are doing as well. When you look at the oil prices, not much of an action coming in there as well. In just terms of Brent crude, that is trading with gains of around 0.9%, so almost 1% in terms of that. Oil was up because we saw China's COVID hopes that are coming in over there, and OPEC Plus meeting that will be there next week as well. So output concerns are offsetting the gains as well. So keeping an eye out on Brent crude prices as well. They're somewhere around the $83 per barrel mark, while WTI crude oil just around the $79 per barrel mark as well. So keeping an eye out on Brent crude as well as WTI crude oil prices as well.
All right, that was the commodities and the Asian market check. Thank you so much for the detailed update, Vinny. But with that, it's time for us to slip into a short break. You don't go anywhere. There's lots more stock-specific action on the other side of this break. Welcome back. You're watching Market Cafe, and let's move on to what's happening on the domestic front. Now, after almost 18 years, Asia's largest slum, Dharavi, will soon get a facelift. The Adani Group has backed India's largest redevelopment project with a bid of 5,069 crores. Around 240 hectares of prime property in central Mumbai will be transformed, with around 60,000 slum families getting free housing. Now, Aishwarya is here with all the details. Over to you, Aishwarya.
Well, it's good news for Mumbai and the inhabitants of Dharavi. Adani Properties, which is part of the Adani Group, as we know, has won the bid for Dharavi slum redevelopment project. It has made a bid of 5,069 crores, which is the highest among all the other entities that participated in the bid. The bid at the second spot was DLF, which made a bid of more than 2,000 crore rupees, and the third spot was Naman Developers, which of course didn't qualify in the final rounds. To give context, the bid was floated about 2 months ago, and about 8 companies had actually shown interest in taking up the project, including some international players as well. And on September 30th, Deputy Chief Minister Devendra Fadnavis had announced that the bidding process will take place in the next 3 months. Also, this location is in the prime of the city, in the heart of the city, very close to the commercial hub of Bandra Kurla complex, and is expected to benefit a lot of businesses going forward. The government is looking at developing this project through a joint entity wherein the lead partner, private partner, will hold about 80%, whereas the government will have a share of about 20% going forward. In terms of the process, the bid will now be moved to the state government's committee of secretaries that will discuss the proposal further. And also the joint entity will be responsible for construction of free housing for eligible slum developers and slum dwellers and occupants, as well as provide amenities and infrastructure to these occupants. The project is also expected to be completed in the next 17 years, and rehabilitation should be done in the next 7 years from the date of issuance and commencement certificate of its first phase.
I'm extremely excited. We've waited for maybe 25 years to even see the beginning of Dharavi's redevelopment, and I'm so happy that this has finally come to be, and everything is announced. And there were issues on how to get the initial lands. The railways have allocated land for the purpose. I don't know the exact area, but some small area which will be there for the initial rehabilitation to start off quickly. And there is a huge commitment on the ground that in 7 years, the entire 250 hectares of people will be rehabilitated in this time. It will be the largest rehabilitation of people in the world, entire world at one time. It's never happened before. I'm extremely excited to see it. And I think it'll give Mumbai a facelift unheard of.
Let's move on from that and talk about the banking space. We have Bandhan Bank. This stock is going to be in focus today, as you know, what sources are actually suggesting that SEBI has given a no objection to take over IDFC Mutual Fund. Ankur is joining in with us this morning to give us more details on that. Ankur, what are you picking up from your sources? What is this that you're hearing in terms of IDFC Mutual Fund?
Yes, definitely. We have been informed that Bandhan Financial Holding, which was in talks for deal for acquiring IDFC Mutual Fund, now SEBI approval has come. In fact, SEBI's no objection letter has been received yesterday late night, and after that, now all the approvals are in place as far as regulators are concerned, because you remember last month Reserve Bank of India had already approved the deal, and before that even Competition Commission of India, PFRDA, had already given the go-ahead for the deal. Remember, here at ET Now, we had reported last month that all the approvals will be in place within a month's time frame, and exactly the same timeline is happening. Last month, Reserve Bank of India approval came, and now SEBI has given go-ahead for this rupees 4,500 crore deal.
All right. Thank you so much for joining in, Ankur. Moving on from Bandhan Bank to Glenmark Pharma, which has been in news for likely promoter stake sale now, but overnight it has also announced an acquisition in the CDMO space. Sharad gets us more details on this. Over to you, Sharad.
Well, yes, yesterday Glenmark Pharma was focused because the media reports were coming in that promoters are likely to sell stake in the company, while later on in the day the company clarified that they have not received any information as such. In the evening and the late night, the important news coming in that they are expected to acquire 100% stake in Sanxi Group for an enterprise value of $230 million. Now, this company is a CDMO player based in Europe, and the important rationale for this acquisition has been, of course, to have a local supplier so the costs come down, and also to expand the customer offerings as well as the product offerings. Now, do remember the important deal specifics. If we see for calendar year 21, the EV/EBITDA ratio stands at 10 times, and the equity value would be coming in almost 1,000 crore rupees after adjusting the debt, and the net consideration would come to the tune of 210 million euro. Now, do remember that this transaction is expected to happen through internal accruals, and the management did say in the commentary that the deal will be EBITDA dilutive on an initial level basis. Now, do remember that there is a mixed views coming in from the brokerages after this deal announcement, as Morgan Stanley has maintained an overweight with a target price of 2,558 rupees, and they have stated that the deal appears complementary to Gland in terms of European Union's market access, branded pharma customer base and some technologies. While on the other side, Citi has maintained a sell rating with a target price of 1,920 rupees, and they have stated that this deal is yet to figure out how these two businesses will complement and generate synergies with each other. Now, the generics and the CDMO business generally don't coexist due to the innovator companies' reluctance to share the technical know-how. So, kind of a mixed reviews coming in from the brokerages on the deal, and even the management has stated that this might be dilutive on an EBITDA basis.
Okay, Sharad, thank you so much for that. That is Gland Pharma for you all. Keep an eye out on that stock as well. Let's move on and talk about auto sales numbers. Now, for November, we will be seeing the numbers for again tomorrow. Analysts are seeing a bit of red coming in the November auto sales numbers. This time around, passenger vehicles are still seeing a high waiting period and muted demand. On the other hand, in terms of retail demand for two-wheelers, it's expected to be reasonable. Let's go across to Shrishti, who's going to give us more of a breakdown on what should we be expecting from the November auto sales numbers. Shrishti?
Well, for the month of November, we are expecting the wholesales growth to remain relatively lower on the back of the destocking after the festive season, and across the segments, we are expecting a red number, that is a decline. Firstly, let's start with the passenger vehicle segment. So here we know that the demand remains unaffected for the premium segments. The waiting period is quite very high for some of the top selling models, but when it comes to the lower end vehicles, the demand was quite muted. For Tata Motors, Maruti and for M&M Automotive Division, we are expecting a decline in single digits between the range of 4 to 6%. When it comes to the two-wheeler market, there we get to understand that the retail demand for two-wheelers was quite reasonable. The urban demand was seen to be leading despite the rural recovery, and in not just that, the scooters did perform very well in comparison to the motorcycles. And coming to the export numbers, so for Bajaj Auto, we are expecting the exports to be flat on a month-on-month basis, while for TVS, a recovery and an uptick of 5% in the overseas market is what we are expecting. But when it comes to the Hero MotoCorp sales data, then there we are expecting a decline of 17% on a month-on-month basis, while for Bajaj Auto that is 13%. And when it comes to the Royal Enfield, there too we are expecting a bit of a decline, but the Hunter demand is quite very strong as of now. Coming to the commercial vehicle segment, what we get to understand is that it was a kind of a flattish month-on-month sales, where the supply chain issues in the LCV portfolio is quite largely behind, but the rising interest rates is something that is hampering the growth. So a decline in overall numbers on a month-on-month basis is what we are expecting. And lastly, if we look at the sales data in the tractor division, there we are seeing the momentum after a normal festive season, but on a month-on-month basis, a cut and a decline is what we are expecting. But overall, it was a decent sales month for tractor division as well.
All right, thank you so much for the auto numbers, Shrishti. Now moving on, we have in studio our lovely ladies Ashesha and Vamakshi. So first up, Ashesha, tell us what are the stocks that we need to watch out for in trade today?
Hi, good morning. So new age tech companies have been in focus for the last many trading sessions, and today in particular Zomato will be in focus, and that is because of a block deal which is expected to happen today. Reports suggest that Alibaba is intending to sell about 3.5% stake in Zomato today. It is likely to offer a discount of about 5 to 6% as compared to yesterday's closing market price. After this particular deal, Alibaba is likely to hold about 10% stake in the company, and Citi is said to be the broker to this particular deal. So on account of this block deal, Zomato will be in focus in today's trading session. Moving on to Dream Folks then, where lock-in period for anchor investors ends today. About 7% of equity was locked in, which will be open for sale in the open market today, meaning thereby Dream Folks will be in focus on the back of anchor lock-in period ending today. Inox Green will also be in focus, and this is because Inox GFL Group has initiated strategic action to deleverage its wind business. Inox Green has paid about 250 crore rupees towards reducing its debt. Inox Wind has also paid about 161 crore rupees towards reducing its debt, and further debt reduction in both the companies is also underway. Biocon, meanwhile, has completed acquisition of Viatris Global Biosimilars business, and KPI Green Energy, the last one to keep on radar in today's trading session, and that is because board meet to consider proposal for issue of bonus equity shares is scheduled to happen today.
Okay, Ashesha, thank you so much for that update and the stocks to watch out for in the trade at 9:15 a.m. But Vamakshi, good morning to you. And what are the brokerages saying this morning then?
Well, good morning to all of you all. Just like Shisha, let's start off with the India internet companies. Now, Bernstein has come out with a report on Nykaa. They've maintained a market perform rating, but they've cut their target price from 258 to 185. As far as Info Edge is concerned, they've maintained their outperform rating, but nevertheless cut their target price from 4,910 to 4,510. Now, Zomato, they've maintained an outperform rating and also maintained their target price of almost 90 per share. Now, all these companies, in their opinion, have demonstrated strong focus on margin. Even the pace of the path to profitability has seen an acceleration. Apart from that, Bernstein believes that Zomato is the top pick in the India internet space, which is why they have maintained its outperform rating. We also have Britannia on our radar. Now, that is a sector that Vinny tracks closely, and Investec has come out with a report on that. They've maintained a buy call on this stock with a target price of 4,736 per share. Now, the joint venture with Britannia can help Britannia grow faster within the fast-growing cheese market in India, is what they believe. Now, Britannia does have a history of entering into JVs with global peers, and which have not had a material impact so far. But the management commentary on the long-term vision for this partnership will be a key monitorable. Apart from that, the valuation of this deal is also at the lower end of the food transactions in India. So on the back of that, we have Britannia in focus. Investec has maintained a buy on this stock. And lastly, we will be focusing on some IT names after JP Morgan has come out with a report. Overall, they're quite negative on the IT space given the high valuations in this space. Deal signings growth has been seeing a slowdown. Margin headwinds are also coming up from higher retention as well as returning travel costs. So as far as the large cap space is concerned, the top pick is Infosys, followed by Tech Mahindra, TCS, Wipro and HCL Tech. As far as the mid cap space is concerned, their pecking order is Emphasis, followed by LTI and Mindtree. And lastly, as in the ER&D space, the pecking order is Persistent, followed by LTTS and Tata Elxsi.
Alright, so do watch out for those stocks in trade today. Thank you so much for tuning in. We're completely out of time on this show. Thank you so much from Vinny, me and the team that put this show together. You don't go anywhere. There's lots more action coming up on the market on the other side of this show.